Thank you for joining us at the Lytham Partners Fall 2023 Investor Conference. My name is Joe Diaz. I'm a managing partner at Lytham Partners. Today, I welcome QuickLogic Corporation, which trades on the NASDAQ exchange under the ticker QUIK. We'll be hearing from Brian Faith, Chief Executive Officer, and Elias Nader, Chief Financial Officer. Management will provide an overview of the company, its markets, and the opportunities in the coming years. Before we begin, I would like to thank all of you in the audience for devoting some of your time today to hear the QuickLogic story. As a reminder, Brian and Elias will be available for one-on-one meetings later today. If you have not already signed up, please visit the Lytham Partners website at lythampartners.com/virtual and click on the one-on-one meetings request button. With that said, let me introduce the management team of QuickLogic. Brian Faith, President and Chief Executive Officer, and Elias Nader, Chief Financial Officer and Senior Vice President of Finance. Gentlemen, thank you for joining us. We greatly appreciate it. The floor is yours.
Thank you, Joe, and thank you to Lytham Partners for having us at the conference this week. And welcome to everybody in the audience. I'm excited to talk about QuickLogic. For those of you that are familiar with the story, I think you'll be excited to hear updates. And for those of you new to the story, we hope that you're going to be just as interested. For the last 30 years plus, QuickLogic has been delivering discrete FPGA devices and embedded FPGA IP to various customers in different markets. And through that period of time, especially in the more recent years, we've established significant differentiation in both how we design and deploy our products and in how we're going to market with those products. That's resulted in strong revenue growth over the last couple of years, and we foresee that growth to continue into the future. And I'll be excited again to share with you a little bit more detail about how we're doing that, including the keystone of all of our programmable logic development now, Australis, which you'll see in the center of the slide there. The last few years have been an interesting journey, starting with our acquisition of an AI software platform company in 2019 named SensiML. SensiML was a spinout from Intel several years prior to that. They were a good partner of ours on AI ML software, and we acquired them in 2019. But the transition from our old QuickLogic to the new QuickLogic didn't stop with that. In 2020, we introduced a brand new IP business model for our embedded field programmable gate array IP. And in doing so, we expanded our partner base to include other folks like Google, working with DARPA, and some other folks in the academic space that were invested in by DARPA. And that led us to co-found a global FPGA open source consortium that we use to further the message around the benefit of bringing open source software and open source workflows into the programmable logic arena. Those last 3 years, 2019, 2020, 2021, all led to us closing record IP contracts in 2022, both in number and in magnitude of contracts. We'll allude to a little bit more of those in a second. But that really set the stage for the growth that we've experienced in the last couple of years and what we're expecting to experience in the coming years as well. More importantly, this growth is coming with really good operating leverage. So we're seeing strong revenue growth, gross profit dollar growth at essentially the same OpEx. And that's why on our August earnings call, we talked about getting the company to profitability, non-GAAP profitability for Q3 of 2023, an outlook for profitability for the second half and for the full fiscal year of 2023. And again, it's been a long journey to get to that point, but it's been incredibly exciting to see that developing and what we believe is going to be happening in the very near future. As part of that, we signed over $31 million in contracts since 2021, just speaking to the number of IP contracts and the growing pipeline that we have. And a lot of that has come through a variety of opportunities, both on the FPGA side and the SensiML AI side as well. In total, this probably is around $1 billion served available market. We believe that number is spanning several different market segments. Again, that'll go over in just a bit. From a technology stack, we have taken a vertically integrated approach to this. So starting at the base level, the bottom, the FPGA expertise, as I said in the very first slide, 30 years in the programmable logic space. We've shipped many devices to different customers, thousands of customers, in fact, many different process technologies. That's given us the experience in working with the ecosystem and these different technologies to bring these products to market. What we've done in recent times is launch the Australis tool. The Australis tool gives us the ability to automate the process that we do our development, and it's radically shortened this development time. The result of that means that we can engage more customers concurrently than we could ever before, and that's led to a lot of the strong revenue growth. And then on the top part of the slide, you'll see that we talk about embedded FPGA IP. A lot of that is based on inclusion of open source components into our software, into our workflow. So we're really benefiting from the incredible investment that a lot of companies around the world, including the US government and Google, are making into open source software. And then lastly, you probably heard a lot of news recently about innovations in the semiconductor space. It's not just around chasing Moore's law and shrinking your process technology. It's about thinking about the problem differently and perhaps doing a multi-chip approach, sort of what people call a heterogeneous integration, to get to the functionality and cost points that the market wants. And we're very much a part of that. We believe strongly that chiplets are the future for semiconductor design. And you'll see some slides later that talk about that as far as recent announcements go. So again, vertically integrating the technology stack supports our new business initiatives. It also gives our customers a choice. Customers don't like to only see one thing on the menu, if you will. And because we can bring our technology to market in various forms, it does give the customers choice. And we think that that's directly led to a lot of the revenue growth that we've seen in the recent years. So let's talk about our business model. As I said in the very first slide, Australis down there at the bottom, that is our IP generator tool. This has a lot of QuickLogic know-how in it, and it creates a lot of agility for our engineering team to design and develop embedded FPGA IP for our customers' process and foundry selection. Once we've done an IP, the typical semiconductor business model is that you have an IP license that you recognize the revenue of at the very beginning when you deliver that IP to the customer. And then there's a back-end royalty associated with shipments of our customer's product into the market. And royalties can last for a long time, as long as the customers are shipping those products. We have examples of royalty easily being more than 10 years, especially if it's into the defense sector. So again, IP license, IP royalty is the first part of the business model. Because we have so much expertise in doing chip design, FPGA, discrete FPGA design, we also have a design services component to our business model on the left. And so if customers say, hey, QuickLogic, I'd love to use your IP, but can you port it to this technology that you don't support yet? Or can you do a device development for me because I don't have the capability to do full device development? More often than not, we can engage those customers because we have that internal capability within QuickLogic. When we get revenue for those types of services, that is funded development, and we recognize that revenue as we're doing that development for the customer. And then on the right-hand side, we have device storefront. So remember I said we've been in business for 30 years selling devices to thousands of customers, many different market segments. We have the operations team, the infrastructure, the supply chain in place, that if a customer would like us to run all that and just sell them a finished good at the end of the day, we have that capability. And again, we've been doing that for some time. So those are the 4 ways that we can monetize the programmable logic technology within the company. Again, IP license and royalty, design services or funded development for customization, and then device storefront at the end. On the right-hand side, you'll see how we monetize the AI ML software platform, SensiML. That is a SaaS business model. So as customers want to use that software to create inferencing models to run AI applications at the edge, that's our SaaS service in place for that. So we recognize across the term of the SaaS contract. And then once a customer has developed their AI model and they want to ship that, we then get a royalty on a per unit basis. So with this blended model of products, services, IP, devices, and SaaS, we get the opportunities for strong revenue growth, especially when you're looking at funded development and device revenue. coupled with the strong gross margins associated with license royalty and SaaS. And that blended model gives us what we think is the best of both worlds, where you get that strong revenue growth and you get that gross margin uplift at the same time. And again, I'll just come back to the point that customers like choices. They like to be able to say, I would like this way or that way from an engagement model. And because we support that breadth of business model, we are winning various contracts in all of these different buckets. Okay. So our most recent large contracts that we've talked about are in the aerospace and defense sector. This is a sector that QuickLogic has been supplying devices and IP to for almost our entire existence, 30 years plus. FPGAs are very commonly used in these types of applications. A, because they are programmable for the end market, in this case, very specialized uses. And B, because these standard products can last in the market for quite some time. And these companies like to know that the companies that supplying devices are going to be around for a while and have the contracts in place to sustain that, and we do. The biggest development here is that we announced a strategic rad-hard FPGA development in September of 2022. So our customer is the Department of Defense, and we are doing this design for the DoD. When we announced this, we talked about the total value of the contract being approximately up to $72 million over 4 years. The first tranche was 6.9, and that was completed. And recently, in our last earnings call in August, we announced that the $15 million option, the next tranche of this, had now been awarded. It's been executed, and it will start contributing to revenue in Q3 of 2023. So this project is exciting for us in many aspects. One, we're being funded to do a design of something that doesn't exist today. So we have an incredible opportunity here to bring all the technology and know-how to bear to create something that is essentially brand new for the programmable logic market. It's funded development, which is great. Our desire, however, is to be the storefront for this device at the end of this 4-year contract. So that as the defense industrial base needs to use devices like this, we can be that supplier of the device to the defense industrial base. And you can imagine this technology would have utility for the Department of Defense and the defense industrial base for hopefully decades into the future. And I believe this is representing a multi-$100-million opportunity in revenue in those coming years. So again, truly excited about the opportunity and really honored that the DoD chose QuickLogic for this critically important technology development. On the bottom, you'll see some of the partner companies that are working with us on this program. So Skywater, the US owned and operated foundry. They are also being invested in by the Department of Defense for onshore development. Everspin Technologies, which is a publicly traded MRAM company, semiconductor company that does a specialty type of memory called MRAM. So we're including some of that technology into this device. And then Trusted Semiconductor Solutions is another partner as well for some IP development that we'll be integrating into the overall device. So good list of partners, great technology development, and we're really excited to see how this program grows in the coming years. In more recent news, we've expanded our served available market in 2 ways. One is by announcing a specialized chip that we'll be developing with a company called YourChip. The other is about expanding the number of process technologies that we're supporting with our embedded FPGA IP. So firstly, the chiplet initiative. If you remember, I was talking about the vertical integration of the technology stack, and that very top one talked about chiplets and heterogeneous integration for customers. So we've been looking at this for over a year. YourChip is a startup company that has some very innovative IP called UCIe. That's the interconnect IP for chiplets. And we've announced that we're going to be collaborating with them on an FPGA-based chiplet. So the idea there is that between YourChip and QuickLogic, we would do an FPGA device or chiplet that could then be bought by larger companies and stacked into packages that include that company's ASIC or technology and this FPGA chiplet. So it's a growth opportunity to bring our technology to market in a way that doesn't exist today, optimized for cost and power. And the types of market segments for this initially would be around edge IoT AI and ML markets, people that already use programmable logic today, and again, would like it to integrate that into their own devices. On the right-hand side, we've talked about expanding our IP library. So we announced the Global Foundries 12LP. That process is the most advanced process that Global Foundries supports in the US. It's a big process, or favored process, I should say, for the Department of Defense and some aerospace applications, but it's also being used in communications, in automotive, in AI, ML, and IoT. So we're excited to be on that process now as well, looking to expand our opportunity funnel in that area. And so Global Foundries has been a partner for a long time, and we think there's a lot of promising revenue opportunities that will come from that development. So this has all just been announced in the last couple of months, and we're excited to see how these evolve over time from a revenue perspective. So if you zoom out for a second, look at, okay, we've got programmable logic and IP and devices and AI software. What are the hot markets for these types of products? For right now, aerospace and defense is actually the largest segment for QuickLogic. It's over 50% of our revenue, and we're fine with that. There's a lot of investment going on in that area right now. Industrial and industrial IoT has been a mainstay of programmable logic use in the overall market for a long time. We have several customers in that area, and we see some growth in there. AI and ML, of course, is a hot topic, and people are looking at how do they solve this problem of AI and machine learning algorithms changing daily. If you're changing algorithms that fast, you probably don't want to commit to an ASIC. So programmable logic is a great way to bring products to market with algorithms that are changing so frequently. And so there's opportunities that we see in that area, and then as well as security or secure applications. For those of you familiar with QuickLogic in the long ago past, we actually had a bigger footprint in the consumer space and the smartphone space. And we were very intentionally, for the last several years, actually focusing away from consumer IoT into these other markets that have, I think, the ability to have higher gross margins, higher revenue potential, and more importantly, longer time in revenue once we win projects, so that we can get a layering effect on the revenue of the company. And we've been executing on that, which is why I think you've seen the nice growth that we've talked about in the last couple of years. So we add all that up, we're talking about $1 billion+ served available market. And that's particularly true when we can start getting the storefront responsibilities for some of the devices, like the strategic rad-hard FPGA program that I was talking about earlier. So we're excited about the market potential. I think we've got a good footprint of contracts and opportunities, new opportunities in our sales funnel in these different areas, and looking to expand that quickly. Speaking of expansion, this just gives you a sense from a logos perspective, who we're doing business with, who we're partnering with. A lot of familiar faces on this slide. What some folks don't know is that we've already been working with all 5 of the top 5 and 8 of the top 10 DoD prime contractors in the United States. And that's come from our heritage of selling devices, discrete FPGA devices into the sector, as well as some of the embedded FPGA IP development. So I think that all led to bringing credibility to the table as we're talking about the DoD contract earlier in the slide deck. So as far as the contracts go, as we said earlier, since 2021 July, we've announced $31 million in new contracts. There's obviously upside from that. The sales pipeline as of our August call is $140 million, and that's the largest that it's ever been in the company's history. For reference, when we talk about pipeline, we're talking about qualified sales opportunities where our teams are communicating with customer teams on technical requirements and business requirements and forecasts, and we're confident that those are winnable projects for QuickLogic. And when they do get won, when they move to contract and PO stage, they move out of pipeline into the contracts. And so even when those opportunities are moving out because they're closed business, we've still been growing the pipeline from a net perspective, dating back to late last year. So strong pipeline growth. The reason why we're able to grow the pipeline this quickly and close these contracts that we're talking about is because we have this Australis IP capability. This tool has really led us to be handling so many different designs concurrently, bringing products to market faster than we ever have. And so we're able to actually meet the demand of the customer in doing so. So that really changed the game for QuickLogic when we came out with that Australis tool. And then just to go a little bit further on that, if you think about the old way that QuickLogic did design, which is on the far right, we'd have to allocate our entire engineering team for one process technology. And that would typically take a year to a year and a half of one entire engineering team to bring an IP to market. That kind of a flow is okay if we're captive, if we're using our own technology for devices and we're taping out a device every year or 2 years. But in an IP model, we have to be able to support where our customer is designing chips, not just where we want to design chips. And so we really had to come out with a different way of designing. And so the CTO of our company and I went on a voyage of discovery many years ago to see how can we bring more automation to this so we can scale the IP business better. And we found that a few years ago. Some of that was collaboration with Google. Some of that was through collaboration with some DARPA-invested academic research. And so we've incorporated a lot of that into the Australis tool. And that's what led us to going from a year and a half, shrinking down to about 3 months for the first time that we do a new process technology. And then once we have that new process technology supported, we can do as little as days for other customers that want similar IP. And that has truly changed the game. If you can just think about that for a second, one engineering team doing something in 6 quarters with now a fraction of the team doing it in 1 quarter. We can handle so many more concurrent projects now, and we can bring products to market more quickly, which means that it's more affordable for the customer. So this truly has transformed the company and how we're able to address the needs of the market. And we're very excited about that. So that's the extent of what we'll talk about on the programmable logic side of our business, FPGA and eFPGA. If you remember on that product line side, we also had the bar on the right, which was the AI ML software. SensiML, again, was a spin-out from Intel. We acquired them about 3 years ago. The push in the last year on SensiML has been to partner with large microcontroller companies that have a significant footprint into the market already with a design base and install base, as well as a large sales force. And they have actually closed a large semiconductor or microcontroller company as a private branded customer. So that microcontroller company is integrating the SensiML toolkit into that microcontroller company's software that they then go out to market and sell to their end customer. And so they are now actively taking that to market. And we're starting to see inbound activity from that already, which is great. That's exactly what we were hoping to see, is the ability for large companies and partners like this to fan out to their customer base so that we get that scale. And that's exciting for us because the IoT market is a hot market. A lot of people are looking at industrial IoT and consumer IoT, adding more intelligence to those systems. And SensiML is a great way to do that, both from a training perspective to create the AI model, but then also coming out with models that meet the needs of really resource-constrained devices from a power, a cost, and a connectivity perspective. So a lot of good progress with this in SensiML, and looking forward to when we can actually talk about who this private branded customer is. At this point, it's still confidential. Okay, so now we're kind of wrapping it together in terms of revenue growth. So we've talked about the programmable logic side of our business with devices and IP. We've talked about SensiML and how everything started to take off kind of in that 2021 timeframe. And this graph kind of represents that. So the green area is anything to do with programmable logic. And you can see that that's grown really well in the last few years, about 240% growth in that timeframe. If you look at the blue business, that's our sort of base mature business, and the gray is some of the devices we did for consumer. You can see that those kind of dropped a bit during this time where Android phones have gone through a bit of a downturn. But even with that downturn, we have been able to grow this company from a top line perspective about 36% CAGR over the last 3 years. And we're feeling good about next year as well. So again, everything sort of turned the corner when we came out with the Australis tool and allowed us to close all these contracts concurrently and grow the top line. The interesting part about this is not only were we able to grow the revenue at this clip, we were also able to essentially keep our spending flat. And so there's a tremendous amount of operating leverage that we're getting through this new way of doing our product design and go-to-market strategy because of that agility and automation that we have with the Australis tool. So what you'll see here is on the non-GAAP OpEx side, it's actually gone down a little bit in the last couple of years. Some of that's actually been allocated to cost of goods as we do some of these custom developments. The gross profit dollars has continually gone up in that time frame. And then, of course, once you get to the 1.0 number, that's when your gross profit dollars are exceeding your OpEx. And as I said in our August earnings call, we gave guidance that Q3 would be the point at which we do that. So we're excited about the model. We think we have the right operating model from an R&D perspective and go-to-market perspective that we can maintain the sort of growth trajectory here into the future because of that leverage. And that kind of takes us to the breakout year, the final slide here. So 2023, we feel, is the breakout year. The last several years have been around building the right infrastructure from the design perspective, from the go-to-market perspective, to get to that point where we could start rinse and repeating contract execution. And we're seeing that with this large DoD contract, with other contracts we've announced, with the strong sales funnel growth being the record of 140 million right now, signing up a private branded customer for the SensiML toolkit. All of that is leading to the strong revenue growth exceeding 30%, the margins improving, the OpEx essentially flat, and that all leads to this non-GAAP profitability starting in Q3. And we'll report on that in our November call, but we're feeling really good about this year and about what the future holds because of all these exciting developments. So again, I want to thank everybody for their time. Hopefully this was a good update for those of you that know the story, and an exciting and interesting company now for those of you that are new to the story. And with that, I guess I'll turn it back over to you, Joe.
Thanks, Brian. Great overview. Couple questions here. Obviously, the company has really evolved over the last handful of years. You've got a pretty broad palette of services today that you didn't have 2-3 years ago. Talk about making that happen. Talk about the process of this transformation.
That's a good question. So what I'll say is that the transformation happened because the opportunities took us in that direction. If you rewind back in time, like 2018, in fact, we were primarily selling our mature business products, and we were selling a device into the consumer space. Through that selling of the device in the consumer space, primarily smartphones, that's where we came across this AI software platform, and customers had some interest in that. And as we started to see, AI is going to happen in the future. We didn't know when in 2018, 2019 timeframe, but it seemed like this is definitely going to happen. So we acquired that company so that we could have more of that core technology as part of our technology offering. But again, we didn't want to stop with just the AI, because then, 2020, this is when people really started to look at FPGA technology differently. And I've said often now that FPGAs have sort of been going through a renaissance period over the last couple of years. You have some startups for the first time in a long time coming into the space. You have acquisitions going on where AMD bought Xilinx and Intel bought Altera. And there's just this newfound energy, I think, around programmable logic. And so some of the really large customers in the world that maybe were already using programmable logic and were already doing their own custom silicon design, they started knocking on our door and saying, hey, I like programmable logic, but I'm doing my own ASIC, so can I license that? And that was something that we've been exploring for some time. But again, we didn't have a scalable model at that point in time until about 2020, when we had this more automated process that we launched to come out with that. And it took us about a year of really deeply reflecting on how do we automate this process? What technology do we have to bring into the fold to do that? And again, it took us a year to get comfortable with some of these open source components that they would make sense. And so we did do that, and we started integrating those things, and then really starting to take it out differently in the 2021 and 2022 timeframe. So it was a long haul to get to that point, laying those bricks. But once we had that foundation in place, it really started to click. It was nice to be able to tell customers that we could deliver an IP to them in 3 months versus a year and a half. That truly opened up a lot of new opportunity to us. The other thing I'll say too is on that journey of how we evolved our products. Even when we first started the IP part of our business with IP license and royalty, that was the default product that we would talk to people about. But inevitably, some people said, I don't have a chip design team, but I need some custom programmable logic because I can't get this in the general market. And can you do that? And so that actually helped us sort of formalize this notion of design services and custom device development, because customers were asking about it and we had the capability internal. So I think it's important to know, like, all of these things came from customer demand as opposed to just having a hammer looking for a nail. And I think we finally got it in the right spot and the right shape to execute on.
Well, Brian, we'll have to leave it at that. A fantastic overview of the company. Sounds like there's some really interesting things to come in the future. We appreciate your time as well as Elias. For all of you in the audience, as a reminder, Brian and Elias will be available for one-on-one meetings today. If you haven't already signed up, please visit the Lytham Partners website at lythampartners.com/virtual and click on the one-on-one meetings request button. With that, we thank you for your time. Have a great day.
Thanks, everybody. Thank you, Joe.